and get the demo accounts and join. Those of you who are entering right now, I have a QR code here, which will help you install the trading app on your phone. And those who have the desktop or the laptop with them, they can use this link. And all of you have been assigned a demo account. If there is anyone who does not have a demo account, we have volunteers at the back, which are kind of now mixed with the crowd. So they will be around and walking. You can ask them if you need a demo account. They will also help you to navigate through the app as we progress. And of course, if you have any questions, you can always ask. I'm sure that a lot of people will continue to join, but let's start this session. Um, this is going to be more of a trading workshop. I have been with Century for more than 15 years now. My name is Yogesh. When I started in 2012, there was a different US president, and it's 2024. So I've seen two tenures of Donald Trump, like a lot of you must have. And the way markets were back in 2012 and the way markets are, it's a very big difference. How many of you regularly trade? Raise your hand, sir. Okay. Okay. And how many of you invest? Yeah. So the biggest question is, who makes more money? An investor makes more money or a trader makes more money? Those who are investing, they will say investor. Those who are trading will say trader. So investing and trading has, of course, a big difference. Trading is more short term. We're talking about today, right away, now. Investment is more longer term. You define longer term in your own tenure. It can be 4 years, can be 5 years, can be 10 years, can be 1 year if the returns are really good. These days, the way markets are, even 6 months can be counted as a longer term. But of course, a lot of traditional investments, they last for 4 years, 5 years, systematic investment plans, a lot of people do, which goes for 8 years, 10 years, even 15 years. The objective of investment is to grow money. So if you are trading, your objective is the same. If you're investing, your objective is the same. But please understand this. You need to have long-term investments portfolio, and then you switch to trading. And this is for the students specifically. I know how excited you are about the crypto world at the moment. And I know that you're beaming and shining and you know what's next. But please understand this. If you do not have a long-term investment portfolio, don't directly jump into trading, right? Each time when we log into so many trading platforms, the first thing which we see is trading carries a lot of risk. These are leveraged products. You can lose more than your equity, right? That is what it is. Trading is riskier. And trading is all about risk management. Whether any kind of investment you do, and especially when you trade in gold, crude oil, cryptocurrencies, anything, it's all about risk management. If you are not able to manage your risk right, it does not matter how hard you train yourself in reading charts, technicals, it is not going to work for you. So I don't know a single trader who has never lost money. Even the first few initial years of me and trying to understand how this market works, I've lost money, I have made money, I've learned from my mistakes. Of course, the age factor kicks in. When I joined this, I was 21. Now I'm 36. Things have changed. But of course, you get to see a lot of markets. So today, what we're going to do is we're going to understand a few concepts. Something which is really important for you to understand is the risk part. And once you understand that, we'll move on to the live platform. So all of you who have your apps will work with apps. Those who have your laptops will work with laptops. And we'll try to learn something new. And please, if you have any questions, please do go ahead and ask. All of you have spent your time coming here, and it's already 7 in the evening. So I want to make sure that it doesn't go a complete waste of time for you. So please, let's start with this. Let's try to understand first, before we move on to the platform, how do trading works. Trading, all the trading platforms in the world there are two kinds. One is leveraged, another is non-leveraged. Okay. Leveraged is the most common form of trading. So today, if you are a trader, you're basically leveraging on your portfolio. And leverage basically means that you used borrowed money to invest, trying to magnify your returns. So any product which you buy on your live trading platform, you don't have to deposit the full amount for it. You only have to deposit a percentage, which is called margin money, right? Which means today, if you want to buy $10,000 worth of Apple shares, you don't need $10,000 in your account. You probably need just 10% of that, which is, what is 10% of $10,000? The students. 1,000, right? So you need $1,000 to buy Apple shares worth $10,000. Now the catch is every trading platform is set in a way that you deposit a smaller amount like a down payment, place your trade, but the moment your loss reaches 50% of the money which you have deposited, you are out of the market. Your trade closes out and what you have lost is 50% of your deposit. That is why it is really important to do proper risk management. So imagine if you want to buy $1 million worth shares, how much money do you need in your account? $100,000, right? It's just like how you buy a piece of real estate, right? You pay a down payment and rest is financed to you by the bank through a mortgage, and then you pay an interest over it. Exactly how trading works. When you place a trade, you do a deposit from your end. Rest is financed to you by the broker, on which the broker would charge you a holding cost if you hold on to your trade. This is as simple as it is. So here, what you see right now are different type of percentages which are involved. So let's say, for example, you could invest in gold, say worth $100,000, and your broker can allow you to purchase 100 times more, which means instead of 10%, just 1%. So what calculation you did with 10%, now imagine doing it with 1%. So now tell me, if you want to buy $1 million worth gold, how much money do you need in your account? 1%, right? So 1% of 1 million, that's going to be $10,000. So today, if you have $10,000, you can buy gold worth 1 million. But please remember one more thing. What did I tell you? The moment your loss becomes 50% of your amount, which you have deposited, your trade closes out. Now, that's the really important thing, because that means a 0.5% decline in the value of gold is going to close your trade completely, and you are going to lose 50% of your capital. That is why trading is really important. So as we do some more trades together, we are going to learn this concept. So this is one very important thing. If you understand how to use leverage right, you have understood 30% of the platforms, right? Next. So this is just an example of what I vividly told you. If you have to purchase 100 shares and the price of the stock is $80, you invest 4,000. You borrow from your broker 4,000 because you're buying 100 shares at a price of 80. So what is the total value of your shares? $8,000, right? Which means you don't have to give 8,000 from your end. You just give 4,000 from your side. 4,000 is funded to you by the broker. And if the price goes to 85, you're going to make $500 profit. Now that $500 profit is on $8,000. So imagine if you were not able to borrow that money, your profit percentage would be less. But same goes for the loss. So we have to understand this concept that trading is always done on margins. Every single platform works like that. So if you understand this concept, you cannot just use this platform which we have. You can use any trading platform. It is same everywhere. And why people love to trade? Because trading is not just about being in the market and experiencing the ups and downs. It's a really stressful time these days. I mean, sometimes I'm sleeping, I'm not able to keep my trades open when I'm off to sleep because I don't know what Donald Trump is going to say next. And by the time he says something and if I'm asleep, my trades can just lose their value. Sometimes I correctly predict the trend, and Friday closing, if I keep my trades open, Saturday, Sunday is a big surprise for everyone. Have you noticed that how major announcements these days, which comes from the White House, comes on Saturdays and Sundays? Why is that? Because there is nothing you can do in your portfolio on Saturday and Sundays. It's closed. If you want to switch, if you want to change, if you want to do anything, so market opens at a big gap, and it does not matter whether you have put a stop loss or not, it gets stopped out. So we have to understand the risk behind it. So this is one reason why a lot of people are buying and selling, because they get to do it on margins. You don't have to pay full value for anything. You're just depositing a percentage. So you can buy shares, you can buy gold, you can buy oil, you can buy any instrument which you want to. And the other half, why a lot of people do this, is because of this concept called short selling. Short selling is one of the most popular things for the platform because it allows you to benefit when the markets are crashing. Can you believe that? If can anyone tell me when was the last when stock markets crashed heavily?
Oh, no, recently when it went into 4,900, no? It went to
April, exactly. Correct.
I lost a lot of money that day.
You lost a lot of money that day?
Stop
Sorry.
loss was not put.
Stop loss weren't put? Can you stand up and show your face? No, sir. That's okay.
Not really, but I can say I made the money also.
Perfect. That's exactly what trading is. So the recent crash which happened in the market, that was on April 1st week. And I'll tell you when it happened, and I'll show you the chart also how it happened. Donald Trump put tariffs on literally every country. And that was the news which was highlighted. And we saw stock markets crashing almost 10% over a period of 2 days. That announcement happened on a weekend, by the way. So Monday morning was a bloodbath. You wake up in the morning and you see your portfolio is just in red. And after 2 days, he announced that he's going to put a pause in the tariffs, and market shot up 10%. So all those people who were expecting that it's going to fall down, they lost money. All of them who were expecting in the first week of April that it will continue to go up, lost money. So the idea is short selling allows us to make money from the falling markets. And the concept is very simple. If you expect that there is a stock or there is a commodity or the price of which is going to come down, you borrow that product from the broker and sell it in the market. And when the price comes down, you buy it back at a cheaper price and give commodity back to the broker. Now you are making money from the falling market. So if you see this example, so anybody who tries to take advantage of the falling prices, he's called a short seller. Okay. A short seller is a person who's willing to make money when the markets are coming down, and he wants to take the reverse position. So we know the popular concept, buy low, sell high, right? We know how this works. Everybody understands this. We have grown up with this concept. What do we have to do? We have to buy low, right? And when the price goes up, we have to sell high and book our profit. This is the ideal form of investment. We know that I want to buy at a lower price, I want to sell it at a higher price. What if the prices are already high? What do? You wait for them to come down so you can buy again. That's one thing, right? We do it a lot of times with real estate sometimes. No, the prices are going to come down, then I'm going to buy, or with so many other investments. In trading, what you can do, you can borrow the product from your broker and sell it in the market. What is happening here? Let's say Microsoft shares. You anticipate that for some reason Microsoft shares are going to fall down. So what you're going to do, you're going to borrow these shares from the broker and sell it to somebody who's willing to buy. So let's say you sold it at a price of 300, so you get $300 in your account, but you cannot take that money out. That money will be locked in unless you do another transaction and give the broker the shares back. So you sold the shares for $300, you get $300 in your account. And once the price comes down, let's say to 200, you use that money to buy shares at a cheaper price, keep the price difference, and give shares back to the broker. This entire process, how much time it takes for this process to get completed? a click of a button. Don't have to seek a broker. If you already have an account, you just have to click sell, and automatically the stock is sold in the market. The price comes down, you click on buy, it's bought back. Now you have made money from the falling markets. This is called short selling. If you understand margin trading and short selling, you have understood 80% of the trading platform. Rest is as much as you want to get involved. So normally what we do, and this is specifically for the traders, I promised you that it's a trading crash course. So in the next 1.5 hours, what we are trying to achieve is maximum understanding of that today, if you have to place a trade, how you will be able to do it. So today we are looking at short selling. There is one thing which I want you to do. All of you have diaries with you on your on your chair. I want you to take these diaries and you go home later. But this diary is going to be your trading journal, right? So today, if you are the person who's starting or who's already, how many of you are already trading but do not have a trading journal? Okay, how many of you are trading there? How many of you have a trading journal? You write your trades. You don't have a trading journal. You do have. Okay, 1%. Okay. You write your trades. All right. Okay, perfect. Why it's important to have a trading journal? Because when you are placing your trade, you're giving yourself a reason that why you're doing this. And that's really important, the why of it. Everything is about the why. Why did I buy or sell? What's the reason behind it? Because when you give yourself a reason and you keep a check on what's the percentage of your trades going right or wrong, you get involved in a very deeper manner in this. So the importance of trading journal, of course, trading journal is one thing, journal about everything. Even today, if you're spending money, you keep a journal of your expenses, which I'm sure very few people do because of the digitalization. But if you maintain a journal, like my father does, you will be so surprised to know that where your money is being spent, and you might cut down your expenses also. So journalizing is very important. You do it with when you're trading, and you do it with everything. You give yourself a reason that why you are doing this. Now, another thing which we are going to do is we're going to cover this, but now we want to take you to the live trading platform and show you how to place your trades. And I'll give you a list of instruments and I'll tell you what to do with it. Okay. So after you leave from here, your course will continue throughout, whether you come back or not, but I'll give you something which you can definitely keep a check on. So here, I'll do this once again for you. So those who have desktops, laptops, you can always check this. I'm just going to log out here. So all of you are given a user ID and password. So those who have the app, you log on with the number, which is your user ID, and the password in every case, I'm sure, will be century with C capital at the rate of 123. And you can log in and you'll be able to see a screen. We have our volunteers around. If you're not able to navigate through the app, just ask and they will guide you how to do this. And I'm sure there are a lot of people who are using Wi-Fi. So please, we're going to experience a bit of the difficulty. There has been something happening with the internet cables. I'm sure a lot of you have heard. So we have slow speed. So just please be patient about it. So this is the login screen for those who have the laptop. I'm just going to put my user ID here. You put the number which you have got, and the password will mostly be century at the rate of 123. This is going to be the password. It's written also. Now this is the first screen right here, and I'm just going to close. Okay. I'm going to put a blank screen completely so you can understand that how to navigate this. Now, first thing what I want you to do is go on a watch list and click on create new watch list. I'm going to give you some products today, which as a practice, you have to keep watching throughout. So while this session is going on, you do that. Even after the session is over, you go home, you do that, you do this for a week, and then you will come back to me and tell me the results that how it has worked out. So when you click on create watch list right here, give it a name, give it trading day one, and now you start adding products. The products which I'm going to give it to you today, these are the ones which are majorly traded by a lot of traders. This is a mix of currencies, this is a mix of commodities, this is a mix of indices, shares, bonds, and I'm going to tell you some strategies as well, how you can combine the buying and the selling together. But let's start with the first very thing, creating a list. First product you create is gold. Raise your hands, how many people love gold and not just as a trading instrument? Those who have your hands down, I don't know what you're looking at, but gold is the best thing at this point of time. It has, the prices have gone up and it has literally become the precious metal which we all talk about. The trading is very volatile. The movement every day is really wild. So you really need gold in your trading account and you really need to look into the price movement. And we are going to go through the average range of how much gold moves so you can manage your quantity, how much you need to buy. So first instrument you need to add is gold, and then move on to silver. Gold versus US dollar is what you have to add. Silver versus US dollar is what you have to add. To a lot of you, sir. So you try to write gold versus US dollar and you'll get it.
It's not reflected.
Gold versus US dollar.
Yes, yes.
Okay.
When we are trying to enter
I will get. Okay.
so the options are not coming.
Okay. We'll check that.
So when you enter gold versus US dollar, you
Yeah.
get gold cash.
Yes, yes. So gold cash is gold versus US dollar. Similarly, silver versus US dollar. You have to write silver versus US dollar. So you get two products, gold and silver. Silver has been undervalued from last 2 to 3 years. And this time silver prices have skyrocketed more than gold at this point of time. I mean, of course, not as high as gold. But in the coming next few years, a lot of analysts have predicted that silver is going to be one of the most important precious metal. So right now it is available $41 per ounce. Even if you're not trading in silver, you're a long-term investor. There are a lot of funds which you can buy, and so these are third-party funds which are holding physical silver bars. You can buy them and hold on to it. So not necessary that you always have to trade. If you have the conviction and the vision that it is going to go higher, there are a lot of these funds which also can help you out. So gold, silver, and next I'm going to add an energy-based commodity. So if you write Brent crude oil or just crude oil. So there are two kinds of crude oil you will find. You write crude oil Brent cash. And then one more crude oil, which is West Texas cash. There are two kinds of crude oils. Why both of them I have got you added? Because there are strategies based on both these crude oils. There is something really good you can do with crude oils. They both have a price difference, and you will realize that there are strategies where you can buy one oil cheaper, sell it in the other market, which is expensive. This is what is called arbitrage, which is again for the later sessions, but it's one of the best strategies. Again, those who want to trade, those who want to do medium-term investments, even they can try to do this with crude oil. So we have two kinds of crude oil. Brent is which comes from the North Sea, and West Texas is the US based, the one which comes from the Canadian oil rigs. So both of them have a small price difference. I want you to add both of them. And let's keep the commodities still here. So do not click on create the watch list yet. I'm just getting you added 4 instruments. And now I'll move on to the currencies. So in currencies, I just wanted to add 3 of them. One is Euro versus US dollar. Euro is one of the most volatile currency, at the same time, the most traded currency in the world. This pair at this point of time, it moves wild and it's one of the favorites for the traders. So you're looking at euro paired with US dollar. You also add on to British pound versus US dollar. And lastly, add dollar versus yen. The one which I am showing it to you. So there are 340 pairs of currencies. As a starter, as a beginner, you don't have to look at all of them. Just look at these 3 currency pairs and that will be enough. Commodities. Within commodities, I have put metals, I have put energy. Currencies, I have put 3 major currencies which are being traded at the moment. There are a lot of currency pairs. If you are already trading, you can definitely add it to your watch list. And then you move on to cryptocurrencies. How many of you trade in cryptocurrencies?
I have a question.
Yes.
I mean, don't you think cryptocurrencies is one of the most dangerous investments we can make for your portfolio? Because I mean, right now the stock market is very ups and down too. But I mean, for crypto, there's no real form of like when you trade in gold, there's a form of like feeling. But in crypto, it's all dependent on if someone now likes the currency or doesn't. So what do you think about crypto?
I absolutely second the thought. In fact, I told you were going to oppose me on the fact that it's one of the best investments. No, yeah, definitely. It's the worst thing because, so what the gentleman said that it's crypto dangerous. Definitely it's dangerous. I mean, I would rather trade in a pair or in a product of which I know the fundamentals too. So I know that why euro would go higher or lower. There is a lot of economic data coming after that. I would know why a stock moves higher and lower. There's a lot of fundamental balance sheets, numbers, products coming in. But at this point of time, every cryptocurrency, by the way, at this point of time, there's no logical reason why it goes up, apart from the fact that a big institution has taken a trade. So I'll tell you why cryptos have become more popular now. It's been existed for a while. Yes.
So is it not all because if you look at the one greatest entrepreneurs in the world, some would call him Elon Musk. I mean, a lot of crypto is also based off of him and what he says.
Yes.
So a lot of people, I mean, trading is always about people's opinions.
Yes.
And he shapes people's opinions. Same with Donald Trump is basically short trading
Yes.
and make a lot of money. But it's also, I think, basically about what other people say.
So that's
all what matters.
exactly. So that's one thing, right? Elon Musk talking about it, Trump talking about it. But is talking enough to push Bitcoin from 40,000 to 120,000? What else has happened there? Apart from that, while these discussions have happened, so that's one thing, but institutions have started buying it. So now there's a lot of demand going through ETFs where a lot of institutional investors, MicroStrategy or Nvidia, or there are so many other big institutions. I'm talking about hedge funds, I'm talking about private banks who have started buying cryptocurrencies. And that is the reason why cryptos have skyrocketed. Is it dangerous? Yes, it is dangerous. But do we want to miss out on something which can be big tomorrow? Now, that's a very serious question. That's a very serious question. I'll come back to you. Because Bitcoin has existed since 2008. And that was a time when people's mentality was very simple. If I don't know something about it, I don't want to participate in it. But that ideology has changed because the next generation is very different, right? We are currently looking at the fact that if you don't know about something, you need to learn a bit about and invest a smaller portion so that if this becomes something tomorrow, you're not the only one who is not able to do this. Yes, you had a question.
I think the cryptocurrency, like the cryptocurrency market in the world is only depend like the manipulation and the money is completely wrong because you ignore that the revolution that is happening right now in the world. If you search for the amount of stable coin that is being commercialized in the world for the past year, you say that this market increased like growth like 50% in only the past year. If you start searching about how cryptocurrencies and how these blockchains are using stable coins for buy and sell commodities,
Yes.
or how the Ethereum can be implementing the financial
Yes.
system right now,
Yes.
you are like only ignoring it and say like the crypto is only manipulation in all these
So
things.
you believe in it.
Yeah,
You believe in it. You talk to that guy. He believes in it.
That's okay. I mean, we all have different opinions.
Yes. So,
It's money that's totally fine.
okay. So I'll answer your question also. See, it is important to know that a product can be volatile, it can be risky, but we need to know all the way through. So, what you said about blockchain is one of the best technologies which is futuristic. But just because we love blockchain, do we need to invest in cryptos? So it's like internet is a technology, and I want to invest in Cisco, which is just a company. It's different. So I understand blockchain is a very important thing, but there are ways to invest in blockchain without taking exposure to cryptos. And I'll tell you the reason why. There was stable coin called as Tether, right? Which fell a lot because there was a big question that stable coins which are backed by an asset, are these reserves, where are these reserves coming from? Legitimate or illegitimate sources? So cryptocurrency is not dangerous because the concept is garbage. No. Cryptocurrency is dangerous because there is less transparency at the moment. There's no regulation at the moment. But that being said, so that's why I say there's something which is dangerous. You don't have to be completely out of it, but you invest less in it. You need to be more protective, more cautious. I'm actually adding cryptocurrency to the watch list here. So let's say, for example, so all of you who are creating right now the watch list, you can search for Bitcoin and Ethereum and Solana, 3 cryptocurrencies which I want you to track. Bitcoin, Ethereum, and Solana, 3 cryptocurrencies. Bitcoin Cash, yes. Bitcoin Cash or Bitcoin USD. Something which will be priced right now 114,000 if I'm not wrong. So here at Bitcoin USD, which is 113,000, almost 114. I'm also going to add Ethereum, and I'm going to add Solana. See, there is a reason, of course. Cryptos are dangerous, but that's the reason why I'm getting it added to your watch list. Because I want you to look at the moment. So why we are creating this watch list? Why we are creating this watch list? Because out of sight, out of mind. It's very simple. Something which remains in front of you. 15 years of trading, what I have learned that it does not matter how many charts you can read. The one chart which nobody can manipulate is the one which is inside your brain. It's just like buying grocery. So today, if you are the person who orders grocery or goes to Spinach or any other supermarket and buys grocery on your own and you keep checking the prices, you will know that when there's a discount and when there's a premium, it goes back to the same concept. It's no different. I'm getting you all these products added to your account. So this remains in front of you so much that this price becomes an integral part of you. So while you order groceries, you're looking at gold prices, you know that yesterday gold prices were this, today it was this, and this is the discount or this is the premium. So I've added 3 cryptocurrencies, I've added commodities, we have added foreign currencies as well. And in terms of global markets, so there is one more thing which I want you to add, and this is going to be a stock index. Okay, all of us know about shares, right? So literally everything we are using right now is shares. How many of you saw the new iPhone, the Apple event? Like the iPhone? No. Came up with a lot of products this time. Anybody saw what happened to the stock after Apple launched? Fell down 2%. Do you know every single time an Apple event happens, the stock just goes down? This is fact. There I was yesterday watching the Apple event and seeing the iPhone Air. How many of you saw the iPhone Air? So those who missed out on the event, there's a phone which is the thinnest phone in the world, apparently. I'm too scared to buy that, but it's called iPhone Air now. And they have launched a series of products. There's live translation on your AirPods, right? After all of that, the stock is down by 2%, right? One individual shares, that's the risk. When you're investing in one company, that's the risk which you're taking, right? Because invested in one product. So whether it is Apple, Samsung, Tesla, Microsoft, Amazon, Nvidia, Coca-Cola, Walmart, any company which you can think of, you're investing in one company, you're exposed to that risk. COVID was the best example. COVID taught us this thing, right? We saw Boeing shares going down. We have been investing in so many other companies, Walmart, for example, so many restaurants, cruise lines, for example, went down. So what we do, we invest in a mix of products, and that is called a stock index. So if you want to participate in a country and you are very bullish on the idea that this economy is expected to grow, say US or Russia or France or any other economy, to get the best exposure, it is through a stock index, which is basically a basket which has more stocks into it. So when you're investing in an index, you're investing in a basket of products. And please remember, there is one way to read how an index works. So the first is there is a number which is at the end of the index. That number can be anything. But this number means that that basket has this amount of companies in it. Okay? Please remember this. And the first is the name of the country. Now, if you search on your watch list, and if you search France, search for France, and tell me which number do you see next to France? Right? Add this in your watch list. France 40. What does this mean? It means that this basket has exposure of 40 companies in it. So if you're buying this, the movement of this index, it depends on the performance of the stock prices of 40 companies which are in it. If someone is feeling, let's say today, Emmanuel Macron, he appointed a new prime minister in France, Sebastian Lecornu, and now this is a very loyal ally, expects to come from a defensive background. He has been the defense minister for the country. Now, if you expect that this is a positive news for France and you want to take that exposure, you're not going to pick one stock from that. You invest in index, France 40, because these are the 40 major companies of France. They're put in a basket together for you. So today, if you are a novice investor, you have no clue, but you want to invest in France, that is the way to do it. Index, a long-term investor can invest in it. A short-term trader can speculate in it. That's really your choice. But it's one of the wonderful things you need to have. Why? Because like there's France 40, you will search for Germany. You will find Germany 40. You will also find US 500, which is US S&P 500, and diversify, right? HK, so you'll find Hong Kong 50, and a lot of you, which is one of the most talked things these days. You keep hearing about it all the time. AI, right? So let's say, how many of you love AI? It's a very open-ended question. Okay. How many of you feel it's going to destroy the humanity and those conspiracy theories? I found one person. Yeah, I hope it doesn't do that. But yeah, AI and tech being talked so much about, right? So now the point is, which company to pick? The one which is most talked about, but again, it's the same problem, the same risk. So what I do, I get a basket of companies, which is called NASDAQ, which is a tech index. So you just write here NDX and you will get US NASDAQ 100. How many companies in it? 100 tech companies. So now when you're buying the index, you're exposing yourself to the tech sector of US, right? So I want you to track these indices. For now, let's keep the watch list this much, okay? I think just adding the forex pair, which I started with, euro versus USD, and Japanese yen. Okay. Now, what is the purpose of the watch list here? You see this as much as you can. As much as you can. You wake up in the morning, the first thing you see is the watch list. Pray to God. And then first thing you see is watch list. You see how the prices have changed. Last column is the current market price. Okay, this is moving right now. The last two columns. This column close. This is yesterday's closing price. Please remember this. Yesterday's closing price. Low is the lowest for the day. This is lowest for today. This is today. Highest, this is highest for today. Percentage change or opening price is what price it opened today. The percentage change, green means it's higher, but higher as compared to what? Yesterday's closing price. So today, if I ask you that as compared to yesterday, gold prices are higher or lower? Higher. By how much percentage? 0.5 percentage. This is in dollars, $19.9. So you can tell me that, Yogesh, as compared to yesterday, gold right now is up by $20. When you see this so often, a kind of range forms into your mind, because what you're seeing right now, that the lowest for gold today is 36.19, highest is 36.58. What do you get to see? Gold has already moved $40 to $50 today. $40 to $50 today. Same. If you look at an index, let's say NASDAQ, look at the lowest, 23,840. That's the lowest. Highest is 20,020. It has moved already more than $150. So you're able to see that range. And trust me, no trader is going to tell you this thing, the power of the watch list, because this is what registers in your mind. This is no pressure. This becomes the part of your natural work. So the best way, whether you're a certified trader or not, whether you're starting your journey today, mark my words, you do this for 10 days, 11th day, you would know that what to expect from the prices. And that's not because you will get some sort of notification. You will get a notification from your brain, because you are seeing these prices so much that now it has become a part of your life. Just imagine any price which you remember right now, whether it is for clothes or grocery or PlayStation or anything which you are tracking. You put this in your list and you do this for a week, 8 days, day in, day out, as much as you can, and you will realize the change it brings into you. I'll tell you the reason also why. So now you have built your watch list. Now we are going to do some live trading. Okay, so if you have your phones, you can start doing this. Right now, we are just going to practice how to execute the trade, and then we'll move on to how to define entry and exit, right? That's the second part of this. So first thing, you need an order ticket. To get an order ticket, you just have to click on the price. So what I'm going to do, let's say this is gold right now. I'm just going to click on the live price here. And I get the order ticket here. Everybody sees the price right now. Gold. This is priced in dollars, USD, per ounce. 1 ounce is 31.1 grams. It's really important for you, all of you, to know that how a product is priced, what is the currency, and what's the weight. So in Dubai, the prices are in dirhams per gram. This is dollars per ounce. Okay, this is really important. Why? Because daily gold is very easily able to move $40 to $50. If you know the pricing, you know how to manage your quantity, right? Which is going to be the next thing. So right now, this is the buying price, 36.45. This is the selling price, which means if you buy right now at this price, the immediate selling is lower than the buying. This difference is called spread. Okay, this is the income for your broker. So please remember this thing. When you're choosing your broker, you need to know that what kind of charges are there. So the difference between the buying and the selling, it is called spread. This is the money which is earned by your broker itself. And this is the inbuilt cost, right? So right now what you do, I want you to put a quantity first and see how it works. So if you go to units here and write 1 unit, you will see that the price of 1 ounce, so 1 unit is 1 ounce, it's equal to $3,644. As you see, this is the live pricing. And you will see that it says market right here, which means if you execute the trade right now, it's going to get executed right away. So 1 ounce, 3,644. So if you have your phones right now, try to open the order ticket and put one quantity and see how much is the price. Don't confirm your trade right now because we're going to increase the quantity. All of your demo accounts have $1 million. Needless to say, you cannot withdraw that money. It's a practice money. But all of you have $1 million here. So you're going to put all your trades in the same account. Now this time, instead of 1 unit, I want you to write 100 units, which is 100 ounce. And look at the price. It's $364,000. You have $1 million right here. You can see this. Everybody can see this, $1 million. But I told you one thing before. If you want to buy gold worth $364,000, do you need $364,000? How much do you need? 1%. 1%. Which is, can you see it is mentioned in your order ticket right now? You just need 3,643. That's all. That's all you need to place this trade. You still have 1 million in your account, but the moment now with me, when you click on confirm and place your order, you will see that 100 ounce of gold has been purchased with a click of a button. Almost all the trading platforms work on this kind of speed. Okay. So before you are executing your trade, please double check. Because if 1 0 is extra, it's going to change your life for good or for worse.
Change the total margin.
Ma'am, at this point of time, the margins cannot be changed. So if you have to place a trade, margin is defined 1%. So you will be able to only use 1%. Yes. Right. Now you place your trade 100 ounce, you have used $3,600, right? Which you'll be able to see in your margins account. There is some error here, but instead of 72, you'll be able to see 3,600. Now, the point is, once this is done, once the trade is done, where do you go and see your live trades? Just next to the watch list, there's an account option which shows positions, right? So if you click here, yeah. Okay. So if you click on account and click on positions, this is what you get. Oh, sorry, instead of 100, I've purchased 400 units. I'm sorry.
Yeah.
Did someone see me doing this? There were 4 trades.
Four people are having the same number.
Sorry?
4 people are having the same number.
That doesn't happen in the live accounts, by the way, if it is happening in demo. So I must have executed 400 units, but okay, 500 units maybe. Now, the example which I was giving to you, be very careful when you're putting your number. Instead of 100 ounces, I have put 500 ounces. But if you see here, now the purchase is 3,643. Just to make it better, I'll close the rest of the trade. So it's just 100 ounces only. Okay. Yeah. So we have 100 ounces purchased. Now you can see your buying price. You can see that there is a small negative, but this is floating right now. In order for your trade to go into profit, your selling price needs to go up. Okay. And this is how trades are going to be done. Now comes the fact, the entry and exit part, which is the most important thing. And that takes us to the next point when we are looking at the price action, right? You click on the menu, go on the charts, And this is what is going to make a difference. So long-term investors, you don't need price action actually. Because for long-term investors, you need more fundamental understanding. Why gold prices would continue to go up in the long run. Geopolitical issues, heavy buying by the central bank, heavy buying, physical buying by the fund managers, interest rates by the central banks at the lower price. That is what is going to push gold prices higher in the long run. But is it going to happen today? So that's the difference between a trading mindset and an investing mindset. A trader does not need to care unless the news is so big that you have to look at. Like central bank decisions are very important. So ahead of central bank decisions, you will see market flat most of the times. But if there is no central bank decision, just an ordinary day with maximum volatility, you don't need to know the next 10 years what gold is going to be like. You just need to know for the next few hours. So first thing what you do, you look at the chart, right? Now, this is where the concept of candlestick comes in. And I will make it very clear at the first sense how candlestick would work. So the one which you see here, okay, let's say this is how it looks. So please understand, this is nothing else, but it represents the price of a product. Okay. Why this is called a candlestick? Because looks like a candle with a wick higher and lower and with a full body. This tells you four very important components. If you want to look at the day trading, you need to know four things. OHLC. O means the opening price. Opening price. So if it closed today, next day it opened at a price. Opening. Highest, which is this upper thread. So this is H. So when you see this thread, the price at which it has gone to, this is the highest of that particular interval. This is a lower thread, lowest. Right? And the most important reason why some of those candles are red and why some of them are green, because it opened here and it closed here. And that is why this candle is green. So when you're looking at a green candle, always remember it must have opened at say 10, could have gone at 15, could have gone lowest as 8 and must have closed at 12. That is why this candle is green, right? And at the same time, let's say it closed here and then it opened here at 12 and then it went down and it closed at 9, for example. This candle is red because it opened here and it closed here. That is what the red and green indicates. Why do you need to know this? Because you need to know that how many consecutive periods a candle has been going down than their opening prices. Why? Because of this. So what I'm going to do is, please remember this thing. On the left corner right here, it says 1 day. What does it mean 1 day? This candle, one candle represents 1 day. Okay? Which means if I move this cursor here today, it tells me 10th September, the opening price is 36.25, closing price, it has not ended yet. It's the current price right now. So when today ends and if the closing is higher than the opening, the color of the candle will be? So you said it right, but I also want to hear from the back. The color will be? Green, right? Why? Because the closing price is higher than the opening. Now, let me show you an example. Look at the candle before this. This is 9th September. What was the opening price? 3635. What was the closing price? 3626. Lower than the opening price. Candle is red. Okay. Why this is important? Because I'm looking at 1 day. What happens if I change this to 1 minute? So can I say that now every candle represents a minute? which means you're looking highest of the minute, lowest of that minute, opening and closing of that minute, and this changes minute on minute. So right now you see that moving. The moment the closing reached higher than the opening price, it becomes green. Who trades on a 1 minute candle? Somebody who's looking for a very short term duration, right? So today, let's say you want to trade for the next 5 minutes. You don't want to know what Fed or central bank is going to do. Don't care about Donald Trump or geopolitical issues. You look at the next 10 minutes. This is exactly how traders work. They're looking at smaller time frames, but also there are some time frames which are very important. And I'm going to introduce you something which is called a 4 hour chart. It's a very important thing, and I'll tell you the reason why. 4 hour chart sets the tone because I'm talking about 4 hour candle. 4 hour candle. If there are 2 to 3 candles formed in similar colors, we have seen it kind of sets the trend for the future. Of course, if it was that easy, then we could have just done that. There are rights and wrongs into it, but it really helps us to analyze it. So let's take an example here. You see this? So 4 hours, 4 hours, 4 hours, and then the next 2 candles are also on the red. If you see here, 4 hours, 4 hours, 4 hours, but you see it continues to grow higher. Look, same thing if you see here, same thing here, and if you keep seeing this, look at this. First, second, third goes down. This 4 hour duration, it's very important. You go and search anywhere, it will not be written in any book. That is the difference between when you trade yourself and when you look into different products and you track the market. See, 3 4 hour candles means 4 plus 4 plus 4, 12 hours. A product has been falling down for 12 hours, sets the tone for the next 4 to 6 hours. Okay. Sometimes being a trader, you have to wait. Not every day is a good day. Okay. It's all about understanding the right side of the trend. Okay. So now let's say, so this is just for gold, right? I'm looking at gold. Let's say if I search any other product, let's say, okay, Bitcoin. Let's take Bitcoin. There's no fundamental here, it's only technicals. So see this is consolidation, right? There is nothing fixed here. But look at this. The moment this happens, first, second, third, and look at the rest of the trend right here. See here. Look at first, second, third, and then see the rest of the trend right here. Look here, for example. First, second, third, and see the rest of the trend. Look further here. First, second, third, and look at the rest of the trend. This happens every day in different products. You might have to wait till this formation comes in. So this is just one of those things. Like you're looking at a 4 hour chart. I'm not even talking about technical support resistance, nothing right now. Just giving you a duration. A short-term trader needs to trade on a 30 minutes duration or maximum 1 hour chart. 30 minutes to 1 hour. 4 hours gives you a good point of confirmation. That is why this is more like a crash course where I'm jumping to this point. You look at a 4 hour candle directly. There are a lot of things in the middle, but obviously we cannot do everything today. But this is an important duration, 4 hours. Second thing is understanding where to buy or sell. That's the most important thing. I'm sure once I discuss this, a lot of you will leave. So let me just tell you right away the entry and exit part of it. There is something called an average true range. Okay. Remember this thing. For any product, you must know how much it moves. Today, what's the first question which you have in your mind? Should I buy or should I sell? That's the first question. What is the immediate second question? How much? How much should I buy or how much should I sell? And the third is, where should I put my stop loss, a barrier? So the first question is, when should I buy or sell? There are different ways to do this. What I'm going to do is, let's say if I reduce the duration of the chart from 1 day to just 30 minutes, now I'm looking from a trading perspective, just zooming out here, okay? And while I'm zooming out, I can see one thing very clearly. We're moving in a trend direction, slightly on the other side. This is an uptrend right now. This is the most important thing. If you're against the trend, you're doing it wrong. You're risking it too much. So the first lesson is always trend is your friend, okay? Never go against the trend of the product. That goes without saying. I know some of you must have known this, heard about this already, but for everybody else who's beginning right now, you always need to understand whether the market is trending higher or lower. How do you know this? See this. Every new low is on the higher side. Every new low is on the higher side. That is the uptrend. If it was coming down, every new high will be on the lower side. That is the idea of how an uptrend or a downtrend happens. Now, if you see this, tell me if the price comes down, say from here to this price. Let's say if this price falls here, should you buy? Now, how do you say buy? Because you can see it's a trend. But tell me one more thing. If you buy here and it breaks this, should you keep buying more? No. Need to get out. That's where your stop loss gets hit. Now, all of a sudden, you're thinking that this is too easy. Did I come here for this? It's very easy. But the point is, how many people would know about this? I mean, if you log onto YouTube and see many videos, there are so many videos built on these things. Point is, are we following this? We're not following this because I'll tell you the reason why. We are humans and we are a big ball of emotions, right? So when we see that we are doing something really good and we are making a lot of money, what we feel, we know how it's done. So next thing, oh, forget about the charts. I know what I'm doing. I'm just going to buy 200 ounces of gold, goes up $10. I'm going to make $2,000 profit and that's that. Do you know what's the percentage of people who are aware about the stop loss? 99%. Do you know how many people keep the stop loss? 1%. That is why, by the way, 85% of the people, 85% of the people, they lose money in trading. If I told you this at 7:15, you should have gone by now. But I waited for an hour to tell you this thing so that you be cautious. 85% of the people who do trading, they lose money. Why they lose money? They're not putting a stop loss. They're not looking at the prices. The entry and exits are not defined. You need to check whether you're on the right side of the trend or not. And you don't need an analyst for this. This is basic survival skill now. Pre-pandemic, there was a lot of barriers. People would be a bit hesitant to try out new things, right? What pandemic made us believe that one skill is not enough. We need to find new ways of making money. And since then, trading has been kind of accepted by a lot of people. So today, from young kids to older age, people want to learn that how to take advantage. You're buying an iPhone today, but if you're not buying the Apple shares, in the next 2 years, Apple is going to come up with iPhone 20 with one more camera in it, and your phone will be obsolete, but the Apple shares will not. I have an Aston Martin and a Ferrari in form of shares. You can have two, apart from the cars. So what I'm trying to tell you is, if you can't own the physical asset, you could always invest in the company which is building it. And that goes for everything. The Boeing plane you travel, the McDonald's you eat, the KFC you eat, the Volkswagen, Tesla, Toyota, BYD you drive, all of them have stocks. Are you investing in it? Is the question. Gold, you wear it. You have your physical, but there is a limit of physical gold you can have. Because if you have too much physical gold, and please do not raise your hands if you have, we have a lot of people here, but it's not safe and secure, is it? In your online account, it can be. Same goes for silver, same goes for crude oil, same goes for every single thing which is difficult to own physically every single time. So, what do? You invest into multiple classes. So, the reason why I made you add a watch list so that you look into different things. Now, this is one way to do it. Average range defines that how much bigger the stop loss needs to be. How do you find it? So I'm looking at Bitcoin right now. Let's do one thing. This is a 30-minute duration. I'm going to go to technical and select an instrument called ATR, average true range. Keep a period of 14 as it is. Nothing need to change. Now, if you see this, so you see here, let's look at the average range. It says 378 right here. Let me try to increase the size. Okay. So if you see this, just going to extend this a bit. Look at this. This says 375 or 378. What does it mean? It means in a 30-minute duration, on an average, Bitcoin could move $378 up and down, right? This is a good thing because now you know that if you're placing a trade for the next 30 minutes to an hour, how much your stop loss at least needs to be. Because if it is $50, it can easily get hit because Bitcoin has a big range. So now you can define your quantity by looking at this. If you buy one coin, you expect a movement of 400, 380 to $400 very easily. If I switch this from 30 minutes to 1 day, what happens? So here, let's see. I make it 1 day. What is the average range? 3,264. Average movement of Bitcoin 1 day. $3,264. What are you thinking? You're thinking if I buy 0.5 coin, I could trade in a range of $1,500 a day, right? But that's why ATR is very important. Gives you an average. So what will happen? Let's say when you look at this, you see 3,264 for the day. Now you're looking at a daily candle. You scroll down and you see here, let's say I clear this and I look at this. Right now, this is very easily consolidating till here, this price right here. So I'm going to draw a line of support right here. See this? You see this price? Why is it important? Touches, bounces back, somewhere around here, and that's here. If it comes down here again, I want to buy it. This is called a line of support. Line of support means gives you a buying level here. So what does it mean? It shows you that if you're looking at the price of a product, which is like this, you draw a line here, you draw a line here, and you know that this is the peak, this is the line of resistance, this is the line of support. So where you want to buy? You want to buy here, you want to see here, right? This is what the chart shows you. This is price action. This is complete price action. What does this mean? This means buyers are sitting here. They are looking at the same chart as I am sitting in, right? So the buyers are here, the sellers are there. Now, if I draw this line here, slightly just below this, here. So you can see, right? You see here, first, second, because this is a daily candle, mind you, it's a daily candle. So if I zoom in a little bit, see this. Look at this. You see, day 1, day 2, day 3, 4, 5, and then again almost here, which means now it's here. If it comes down to this level again, which is somewhere around 101,490, it's a good buying. Now, when it comes down here, I buy it here, but I keep my stop loss at least $3,000 down because that's the daily average range. Now, when that happens, how much unit I need? So now I know that my stop loss is $3,000 down. If I buy one coin, my loss is 3,200. If I buy 0.5, my loss is 1,600. If I buy 0.2, lower. So average range helps you decide the quantity. If you can manage your quantities well, trust me, it's very difficult to lose your entire money. What you keep hearing from people, right? How many of you have heard this? Don't trade, you will end up losing a lot of money. Every second day, every other person, right? So what is the problem? There is no way of doing this right? There is. But that's the disciplined way. And we all know that discipline is something which is not built in one day. We have to focus our mind to it. So today, one thing which we need to understand, average range, right? So average range is very important. You can select your duration, you can write average to range, and you can find out how much an instrument moves. Second very important thing, something which really helps you to enter buying and selling, a technical indicator which is called a RSI. There is another technical indicator which is called moving average. I'll explain you RSI first because it's easier to understand. RSI basically tells you, it's called relative strength index. It gives you an idea whether a product is overbought or oversold. So overbought or oversold. So what I need to do is, let's say I'm looking at Bitcoin prices right now, I'm looking at a daily chart. Let's say while this, if I clear this and go to technical and select RSI. Keep the level as it is instead of, so I put 80-20 here. Normally it is 70 and 30. And I'll tell you the relevance of this. So just look at this, maximizing this. This basically tells you when the price reach above 70, that is when people start selling. When the price reaches below 30 is when a lot of buyers jump in. Now, if I zoom this out, you'll be able to see the pattern, right? See this. Now I'm going back years and years because this is a daily chart, so it takes me 3-4 years ago. Every candle represents one day, and I'm looking at since 2024. So now if you see this, look at these shaded parts right here. This right here. These are the ones when it went above 70, not exactly at 70. A lot of traders make this mistake. RSI is 69, 68, 70, this sell. That is not how it works. It has to go above 70, 72, 73, 74. And you will see eventually the price is falling down. Similarly, if you see from the buying zones right there, just below 30. However, if you see the trend, somewhere around 30 right here, you see the bounce back here, 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 here. But a major bounce below 30. This is RSI. Now we are looking at a daily chart. If I make this smaller, say a 4 hours, you see the entry points and exit. So it changes. Right now, if you see, it's 60. So I don't want to sell Bitcoin. I don't want to take a short position in Bitcoin right now. I want to wait till it goes above 70 or till it goes below 30 for me to buy, because I'm looking at a 4 hour chart right now. But at the same time, let's say if I were to reduce the duration and see it on a 30 minutes time frame. Now, if you see this, look at this. From a 30 minutes time frame, it has already started coming down. Look at this. Look at this. Right. So for 30 minutes, what is my average range? $370. So if I sell now, I should put my stop loss $370 higher because I'm short selling at the moment. So this is how the average range, when combined with the technical indicators, can help you first give a direction, how, when to enter and when to exit. So this is one of the most easiest tools to understand that. You combine this with various studies, of course, but there are 200 technical studies, to be honest. You don't have to know every single study to this. In fact, more you know, it becomes sort of analysis paralysis kind of a thing. You overanalyze everything. Now you compare this and moving average, you compare the Bollinger Bands, it becomes too much for you. So what you do, you stick with the basic. First of all, you need to find out whether you're on the right side of the trend or not, whether it's an uptrend or not. Second very important thing, which a lot of traders do, breakout trading. Breakout trading, one of the best things which can happen. Breakout trading, first of all, it stops you from being involved in trading every day. Plus, the chances of doing the right trade increases. What we are looking at a breakout trading, I'll show you by example. So let's say if I'm looking at gold prices, look at the chart. Okay, to zoom out a bit. Okay, let's see this. For example, here. Can you spot the breakout here? Anyone can see the breakout in this? Where the breakout happened? See it here? You see how this was consolidating throughout. When the breakout happened, you saw the surge. Plus, by the way, look at the multiple channels which have been formed. So, sorry. Look at this. See the breakouts happening here. So, breakout went up, consolidation, breakout went up, then consolidation, breakout went up, consolidation. This has existed like this. We need to see it. Now, if you're here, if this breakout instead of this, if it happened here, would you buy? You won't buy. You will go with a short selling position. You will make money when the markets fall down. Breakout trading it increases the chances of your success in the trading part. So, which brings me to the most important point. Every day a trade has to be put. It's not necessary. It's not necessary. Sometimes you have to wait for the right entry and exit points because that increases the probability of your trade being right. And second thing, the risk reward ratio. We always hear about 1:2 risk reward. You risk this much to make a profit of this much. How many of the traders are following 1:2 risk reward ratio? One. Okay, rest of you, if you're not doing it, I hope it's working well out for you. But 1:2 risk reward is very simple. You bought something, and tell me if it happens with you. You bought something, prices dropped, you're losing $2,000, you're adding more to this, becomes 3,000 loss, 4,000 loss, and all of a sudden market goes in your favor, reaches $500 profit, you close your trade. The same trade which you were holding for a $4,000 loss, you booked a profit for 500. Why? Because you're scared that it doesn't go back to the same price. That is not the right risk reward. If you wanted to make a $500 profit, your risk would have been $250. Stop out. So your stop loss and your profit needs to be in a 1:2 position. I'll tell you the reason why. And you try this out. Today in your demo account, don't even need to figure out the entry exits. Just try this out for 2 or 3 days. Use your watch list to add all the products. You buy some, you short sell some. Don't even think about analyzing or anything. Just do one thing. Your stop loss needs to be, so let's say, for example, if you are expecting a $200 profit, your loss needs to be 100. That's it. 1:2. I'll tell you the reason why. You have right now some 8 or 10 products in your watch list. You do 10 trades every day. There are 20 trading days, exclude Saturday, Sunday. So you're going to do 200 trades. Let's say out of 200 trades, 70% of the trades go wrong. Wrong completely. 70% of the trades are going wrong, which means it hit your stop loss, right? So 70, 140 trades go wrong. So which means how much is your loss? $14,000. 30% trades went right, it hit your take profit. 30%, which means 60 trades. 12,000 profit. What is the net loss? 2,000 minus charges, all of that. 2,000 loss when 70% of your calls are wrong. 70% of your calls are wrong. Which means if you hit the odds even 50-50, you end up making a net profit. Why? Because it's 1:2. Because each time you book a loss, your profit which you book is twice the loss which you have booked. So if your rate is 50% right, if you hit 50% also, in fact, by the way, if I calculate, if you hit 60% also, you end up in a net profit. Again, me saying net profit does not give you a guarantee that you will make money, markets are risky and all of that. But you have to understand the risk reward part. The biggest problem is traders, especially the people who join new, they don't put the stop loss, they don't follow the risk reward, and number third, they don't do diversification. So if you're crazy about cryptos, you're just going to follow cryptos. If you're crazy about gold, you're just going to follow gold. But you're making a grave mistake because right now, markets are so volatile that you cannot just afford to invest in only one thing. If you're just bullish on stocks, stocks could go higher, but there will be a time when markets will come down and you may be stuck on the wrong side of it. But what will happen? At that point of time, gold prices might be going up. Gold prices, guys, gold prices in last 1 year have skyrocketed. And in between that, we have seen 2 market crashes very easily. What does it tell you? Have to diversify. If there are Middle East issues, oil supplies are getting changed. We have seen oil prices going up 12%, coming down 12%. Oil, gold, currencies, euro a year ago was 1.05 against dollar. Now it is 1.17 against dollar. Growth. Dollar yen, which was used to be 120, is now 145. So it's changing, right? Every day trends change. So from commodities to currencies to indices to crypto. In April, Ethereum prices fell down to $1,400. Right now it is $4,400. At that time, if you put your faith and believe in perspective and don't trade in cryptos, you're missing out on the opportunity. This is the new normal. I'm so sorry to say this, but at this point of time, if you don't know about something, it's your job to find a person, learn about that thing, and please invest because things are changing. The next generation is very excited about the future. So, what they're doing, they're investing in things which we have not even heard of, right? There's already a whole different language they speak which I'm not aware of, and I'm sure a lot of you don't know. But I am telling you that even in terms of investment, the mindset is very different. So you have to understand that right now you're stuck between 2 generations. A generation above you who taught you to save and invest into things which you know, and a generation below you who's setting out the trend of what's next. So I'm so sorry to say it, but all of middle-aged group, you have no say in what is going to be the next investment trend because that is going to be decided by the next generation coming in. And they're excited about tech, they're excited about cryptos. So what we need to do is follow our principle, but put a small portion which you don't mind losing. Money in cryptos, So do not invest your children's college fund in cryptocurrencies. Let me say this out loud very clearly. Do not invest money in cryptos which you want back in next 6 months. If you're closer to the retirement and you don't have any source of income, don't put your entire savings or IRS into it. 1% or 0.5% of that, just put and forget about it. If this becomes something, your children will love you and remember you, hopefully. If it doesn't, no need to tell your children about this. It's very simple, but do not miss out on the opportunity, because right now it's happening, right? November 2024, before Trump was president, $30,000 Bitcoin. Now, 120,000. Now, if you didn't believe in it, I also didn't either. But that's what happened. April 1st week, Tesla down $220. Right now, $350. $100 up from April to August.
Same triple.
Same with Ripple. Every single product we have seen exponentially getting higher. That is because we have to diversify. That watch list which I have given to you, if you follow what I'm telling you, you'll remember that you attended this session, even if you don't come back here again, but that will help you for your entire life. So please glance through those watch lists again. Another thing which, before I take any questions, one thing which you can definitely apply on an indicator, which is called moving average. Okay, moving average is a very important tool. For a lot of day traders also use moving averages. Moving average is basically on an average what has been the closing price of a product. Very simple. So today if I'm talking about Bitcoin and I ask you that what is a 20-day moving average of Bitcoin, I'm just asking you that in last 20 days, on an average, what price Bitcoin has closed at. Why this is important to know? Because if the prices close below the average, it means the trend has changed on the downside. And I'll show you how this is done. So all you need to do is, right now, we are looking at gold, we are looking at a daily chart. Let's say if I select moving average, this says 50 day. So I'm going to put 50 day and save it. Now, if you see this line right here, you see how higher this is above the 50-day moving average, which means over a period of 50 candles. So this is one day. So 1, 2, 3, 4, 5, 50. Last 50 days, what has been the average closing price of gold? This line right here. What is its significance? If price falls here, this is an excellent buy. But if it breaches down, a trend is changing. Okay. Higher the duration, larger the impact of this. So ideally, what a lot of people do, they use two moving averages. So one is simple moving average. Another is EMA, exponential moving average. I'm going to make it very easy for you. Exponential moving average means it gives more weightage to the recent closing price. Simple moving average is just the average. Exponential gives more weightage to what has happened last night as compared to last 20 days. So a lot of people, instead of using simple moving average, what they're going to do, they're just going to clear this, and what they're going to do is they make two moving averages, and one is, so I select from simple to exponential, and this is going to be, let's say, a 20-day moving average. And then they do one more, a 50-day moving average. Let me change the color, say this. And they wait. So there is something called the golden cross. Golden cross means when the short-term moving average, the 20 days, which means the red line, crosses above the long-term moving average, which is the 50-day, it signifies an upside momentum. Entry and exit. So those people who are willing to know when to enter and when to exit, whenever this crossover happens. So right now, if you see, it has not happened. It has not given that crossover at the moment. So if you see back here, look at this. See, this is a close crossover right here. And after that, the prices have continued to go higher. each time, so this is called a golden cross, right? If the short-term moving average, and always remember this thing, and it's very simple. The short-term, which means recent moving average, 20 days, it crosses over the long-term moving average, which is 50 days, upside. But if it happens opposite, the long-term moving average crosses above the short-term, which means a bearish trend has begun. Now, the question is, does it always happen? No. But if you follow and do your trades as per that, the chances of your success are higher or lower? That's the question. If you put 10 trades using this crossover and you put stop loss in either one of them, we can expect a 50-50, right? And if your risk reward is 1:2, we just learned that that's a great thing for us. That is why indicators are important. These indicators do not tell you anything else. It just tells you where the buyers and sellers are getting in. So following this thing, lastly, there's one tool which is called moving average convergence divergence. Okay. This is the last thing I'm going to tell you. Here, if you click on technical and write, let's say, yeah, moving average convergence divergence. So there is one line which is a 12-day moving average. Second line is a 26-day moving average. And this single signal period, this is a moving average of the differences of this moving average. I'll just tell you exactly what it's going to do. So save it and look at this. This does the same thing, but this shows you the momentum. So how many times you enter into a trade, but you don't know for how long this is going to be like this, right? Maybe you wish that someone would tell you that after this, the momentum is going to fall. Look at this right now. So this study actually tells you one thing. This middle line, this middle center line, this is called the zero line. Please remember this. In order to get and follow a buy signal, the crossover for the short term, the MACD line should cross over the signal line below this center line. If it is happening above the center line, it's not a buy. It must happen below this zero line that the MACD line should cross over the signal line. You'll be able to see which one is MACD and which one is signal. When this happens, you see the bullish momentum starts. And for the bearish, the signal line should cross over MACD line, but it should happen above the zero line. So for bearish, should happen above the zero line. For bullish, should happen below the zero line. But this helps you understanding. So you see these bars, they tell you how much is the strength, how much is the volatility in this. So where you see there is less, which means the difference was very less, it did not move that much. Sometimes you will see that here the bars start getting green, right? That is where you can assess a trend change could begin. And if it becomes with the crossover, then it confirms that part. See, Century as a company, we provide consultancy services. There are consultants who are taking care of all of these things. So good news is you don't have to do it by yourself. There are people who can give you these directions and that can be done. But second thing, the most important part is we try to make sure that people are independent and they understand that why a call is being issued, and you yourself should know the premises of that. It's really not that difficult. If you have to trade in your own account, you don't need to be a certified CFA or a trader or a certified trader. Please do not pay to the institutions for teaching you online trading. Don't have to pay for that. This is free of cost. Today, there are so many of you here. The purpose is not to charge you for this. This is education. This is free of cost. What I'm telling you, there's probably a guy on YouTube saying the same thing, maybe better than I am doing at the moment. But the point is, who has the time to look at all the videos? So what I'm doing is just consolidating everything and telling you what needs to be pointed at. These are a few technical studies which you need to do. There are 2-3 more, but obviously I am also a human, and I understand that it's before it becomes too boring already. We are willing to do one-on-one sessions for all of you who are here. Again, free of cost, whether you're a client here or not a client. We are going to do one-on-one sessions for either one. You just register a slot, and one of us will do and teach you properly. So something which I've covered right now in 1.5 hours, we can have this done over a period of 1 week where I teach you product by product. Absolutely no charge, just because you have taken out time and attended this session, which I'm so grateful for. So we are going to give you one-on-one sessions, absolutely free of cost. Just register your time slots, and we are more than happy to give you a demo account and start your journey for 1 week. We'll teach you exactly product by product, why gold moves, fundamentals, central banks, all of that. As deep as you're willing to go, we are definitely going to help you out with that. So this is something which we're going to do post this seminar, and we keep doing these kind of sessions, of course. If you have any questions from whatever we have discussed, more than happy to answer.
I have a question.
Yes.
There are some intermediaries, those are charging nothing.
Yes.
Said like that, we don't charge you anything.
Yes.
So how they do so?
You just answered your question. How are they doing it?
Yeah, that's what.
If
What is the
we-
logic behind this?
There is absolutely no logic. See, there are two kinds of brokers which exist. One that pass your orders to the main market, right? So they don't have any risk on themselves. They charge you a transaction cost. That's it. Those who are not charging you anything, they are not going to stay here. Please be very smart about this. There is no such thing as free of cost. I mean, sessions can be done free of cost. But tomorrow, if you open a trading account with me, I'm going to charge you. If you go to a restaurant, eat and not pay for it, either that food is bad, right? That's the only reason. So there is no such thing as free of cost. If you're getting a broker who's telling you just join us and we are not going to charge you spreads, zero commission, zero holding cost, zero commission, then your money is going to be zero after some time. It's very simple. There is no such thing as free of cost. You have to first of all find out the broker you're dealing with needs to be ESCA certified, category 1, Securities and Commodities Authority. We all are so aware Dubai is the place where companies come and go. There have been incidents happened where people have lost millions of dirhams. Please check. Client insurance protection should be there. ESCA regulation should be there. License 1, they should have a physical presence in the office. If there is a rep office in Business Bay with 1 bedroom and the company is in Mauritius or Cayman Islands, please take the hint. You're not going to find them again. It's very simple. So please be very smart about this. This is your hard-earned savings. $1,000 or 100,000, money is money. You put so much effort in making this. Please do not just give away over the calls. When you receive these calls that please open your accounts, do not open your accounts over phone calls. Go meet people, grill them, ask them questions. What are you going to teach? What are you going to do? Can you explain us the platform? You should not be putting a single penny until you are prepared for this. Because this is stock market, guys. Trust me, you can be ending up on a very good side of it. I have witnessed 5 elections, and I'm telling you, election nights are the most amazing nights. It's festival. People are here, clients are here, they're trading live, and I must tell you, I see some very happy faces that day. I see very disappointing faces that day, and I'm telling you, markets work like that. There's going to be red, there's going to be green, good days, bad days. But if you lose money in the market, that's fair. But if you lose money because a company took your money and left, that's not fair. And if you did this just because they were a penny cheaper, then, I mean, that's just not right. So try to save your money, not in terms of cost. Regulation, check licenses, check regulations, grill people, ask the person who's meeting you, ask them about markets. What is your view on the market? What is going on with central banks? What is happening with economic data? What is your view about the economy? Not just a guy handing a brochure that please buy my product because we are, no. So whether the companies are based in Burj Khalifa or anywhere in the world, offices can be bought. Knowledge cannot be. The experience is really important, guys. So don't pay more. I will tell you, pay as much as you can. If you're getting the right consultant, pay 10 times higher. At least save your money. You take a right investment decision, it's going to be good for the next 10 years. So don't even think about, I want a broker who's cheap. Cheap is not an option. In fact, go for premium, pay, but get that service. That should be justified. There are two things. One is costly, one is expensive. Right? Business class is not expensive, it is costly. There's a big difference. When a service is added, it adds the cost to it. But if it's the same thing and we're charging you more, then it's expensive. So definitely, costly is what you should go for. But yeah, please make sure that you take care of your money. The broker you are picking should be ESCA regulated and category 1. Category 1 requires a paid up capital of 30 million dirhams. It shows money in the company. Category 5, easier to get. There's no paid up capital requirement. So you make yourself aware about these things. There are a lot of companies which have offices in different jurisdiction. Always think that tomorrow if something happens to my money, do I have to go to Malaysia or whatever to find out my money? Whom I should report to? Where should I go to? Local regulation. That's the story. If you were in US, you would want to trade with a US regulated based broker. You should know if something happens to your money, where do I need to go to? There has to be a physical address. There has to be a physical regulation. There has to be a regulatory authority. Yeah. Any other questions? Yes.
Just one-to-one sessions can be selected, or it will be purely up to Century to.
No, please. Just so anybody one-on-one, just send an email or you talk to your relation. The people are right here, and they will book out the slot. Definitely. Every single one of you is here is entitled to get free of cost sessions. Do not worry about that.
And whatever we do the investment, it is in the broker's account, or is there a way that we can also give it in our?
So when you open an account, when you transfer funds, you transfer to Century Financial, MSNBD, FAB, but the money is kept in a separate segregated account. So tomorrow something happens to us, it goes to ESCA. They are responsible for the distribution of the funds to the clients. It's a separate segregated account. Plus there is a client insurance protection which is available to all the clients, which is there. We'll be able to provide it. So once again, thank you so much. You're such a lovely people all around and you came all the way today. Thank you so much for your time. Please reach us out. We have some food arranged. We have some bags as well. Please do not go without them. And if you need anything, please call our people and we'll definitely have one-on-one sessions arranged for you. And we'll have more seminars coming in the future. So just be connected. Yes, thank you. Century account management service also. So not the wealth management we have, but those are for structured products.